Welcome to this video on how to achieve the APC Valuation Competency. I'm John Faulkner, FRICS. I'm the Director of JFPC Limited and the trainer for the JFPC Valuation School. If you want to know more about me, please see my introduction video. Let's have a look at the APC competencies in general. All Level 1s are knowledge and understanding. Level 2s are the application of knowledge and understanding, in simple terms, doing it. And all Level 3s are giving reasoned advice and showing depth of knowledge. The JFPC Valuation School gives you the knowledge and develops your understanding to achieve Level 1. You must have the experience to achieve Level 2 and Level 3. Let us have a look at the valuation competency requirements from the 2018 Pathway Guide. Level 1 says, demonstrate knowledge and understanding of the purposes for which valuations are undertaken, the relevant valuation methods and techniques, the appropriate standards and guidance, and any relevant statutory or mandatory requirements for valuation work in your area of practice. Your area of practice meaning, are you commercial, are you residential, or are you rural? If you're commercial, are you retail, are you office, are you industrial? Now under Level 1 there are three elements. Firstly, we've got the appropriate standards and guidance, and we've got the relevant statutory or mandatory requirements for valuation work. These are the Red Books. We've got the Global Red Book, and in the UK we've got the UK National Supplement. This is what is covered in Valuation School Module 1. Secondly, we've got valuation methods. We've got 5 conventional methods of valuation, and these are what is covered in Valuation School Module 2. And thirdly, we've got investment valuation techniques, both growth implicit and explicit. These are what are covered in Valuation School Module 3. Now this is the knowledge and understanding that you must have irrespective of whether you're aiming to achieve Level 2 or Level 3. Level 2. It says, demonstrate practical competence in undertaking both capital and rental valuations and detailed involvement with the preparation and presentation of reports for clients and senior managers. Demonstrate your ability to use valuation methods and techniques appropriate to your area of practice, and show how the relevant valuation standards, guidance and law have been applied to your valuation experience and area of practice. In simple terms, you've got to show how you have applied the Red Book to your valuation experience. So Level 2 clearly states that you've got to undertake both capital and rental valuations. Now we undertake capital valuations for purchase and for sale, for secured lending, for inclusion in financial statements, most commonly company accounts, for statutory purposes such as compulsory purchase or leasehold enfranchisement, and sometimes a client will want valuation purely for their internal purposes. Now it doesn't matter why you're undertaking a valuation, the valuation process is the same. We've got to agree terms of engagement, we inspect, we measure, we carry out enquiries, we assemble and analyse comparables, we produce the valuation calculations, and then we report. So to repeat, it doesn't matter for which one of these purposes you've undertaken a valuation, the valuation process is the same. For rental valuations, we undertake rental valuations for leasing and for letting, for rent review and lease renewal, for rating, and usually as part of a capital valuation, we're asked to provide an opinion of market rent. And the same as for capital valuations, it doesn't matter why you're undertaking a rental valuation, the process is the same. Obviously, when we're undertaking valuations for lease renewal or for rating, we've got legislation to adhere to, and if we're undertaking a rental valuation for rent review, we've got to do this in accordance with the requirements of the lease. Level 3 states you've got to be responsible for the preparation of formal valuation reports under proper supervision and provide reasoned advice. You've got to produce reasoned valuation advice in a range of forms on a range of property types, valuation purposes and valuation methods, and demonstrate a thorough knowledge of the appropriate valuation standards and guidance and how they are applied when providing advice to clients and others. So, for valuation, both Level 2 and Level 3, the requirements clearly state valuation methods, the plural. The advice that I've been given for 20 years now, and nobody's told me I'm right, but then again nobody's told me I'm wrong, but a lot of people have passed the APC based on this advice, is that you need experience in 3 methods. There are 5 methods of valuation: comparison, investment, residual, profits, and the contractor's method, also known as depreciated replacement cost, abbreviated to DRC. Now, not 1% of APC candidates will have experience in the profits method. Also, I would say that not 10% of candidates would have experience in the contractor's method, DRC. These tend to be candidates working in local authority or for firms undertaking local authority consultancy, and the candidates get involved in valuing properties such as schools for the council's asset register. So for the vast majority of APC candidates, we're left with 3 methods, i.e. comparison, investment, and residual. Level 3 is distinguished from Level 2 by the amount and the complexity of valuations that you've carried out. So if you've just done a few valuations that are fairly simple, stick to Level 2. Then again, if you're working for a firm where you're on a job rotation, I think if you've spent 3 months in a valuation department, that should be more than enough for you to achieve Level 3 valuation. So as an example, if you've used the investment method, for Level 2, I think if you take a rent and you capitalise that rent, that's adequate for Level 2. For Level 3, you need something more complex, such as an under-rented investment, an over-rented investment, or say an office building with 5 different tenants where you've got different lease start and end dates, you've got different tenant covenant strength. You need something with that bit more meat in it. Please note that under the 2018 pathways, there is now a loan security valuation competency, which states this competency covers valuation for the specific purpose of loan security in accordance with the valuation standards, the Red Book, for residential or commercial property. So if you're undertaking valuations generally, but within that valuation experience, you're undertaking loan security valuations, you can get 2 competencies out of it. Also, from the pre-2018 pathway guides, and also included in the 2018 pathway guides, we've got valuation of business and intangible assets. So as the name suggests, this is for business valuation. And we've also got valuation reporting and research. So this competency would not be applicable for the vast majority of APC candidates. This is for those candidates who are working usually for a big firm who have a research department, and the firm produces periodic market reports. So as an APC candidate, you're involved in doing the research, analysing the details that you find, and reporting accordingly. RICS mandatory requirements and guidance. You've got to be aware of everything that RICS has published on all of the competencies that you will be declaring. For valuation, the primary publication is the RICS Valuation Global Standards, that is commonly known as the Red Book. This was issued in December 2024 and is effective from the 31st of January 2025. So the Global Red Book is supplemented by the RICS Valuation Global Standards UK National Supplement, that is commonly known as the UK Red Book. This was issued October 2023 and is effective from 1st of May 2024. Please note that RICS publishes many documents that have a different status. We've got the RICS Professional Statement that has the abbreviation PS. So a professional statement imposes mandatory requirements for RICS members and regulated firms. There is the RICS Guidance Note with the abbreviation GN. This provides users with recommendations or an approach for accepted good practice. Compliance is not mandatory. We also have RICS Practice Information. This is to support the practice, knowledge and performance of RICS members and regulated firms. And, just like the guidance note, compliance is not mandatory. So for valuation, in addition to the global and UK Red Books, we also have the following RICS publications. Comparable Evidence in Real Estate Valuation, first edition, effective 9th of October 2019, a guidance note. Depreciated Replacement Cost Method of Valuation for Financial Reporting, first edition, November 2018, a guidance note. Discounted Cash Flow Valuations, November 2023. This is RICS Practice Information. Another guidance note, Environmental Risks and Global Real Estate First Edition, effective 1st of December 2018. Measurement is a separate APC competency, but it is integral to valuation. So we must have knowledge of RICS Property Measurement second edition, that is effective from 1st of May 2018, that is a professional statement. This currently applies to office and residential properties. We also have a guidance note, the RICS Code of Measuring Practice, 6th edition, 2015. We then have another guidance note, Valuation of Development Property, 1st edition, effective 1st of February 2020. Now this is essential reading for anyone also aiming to achieve the Development Appraisals competency. Then we have another professional statement, Sustainability and ESG in Commercial Property Valuation and Strategic Advice, 3rd edition, effective 31st of January 2022. So knowledge and understanding of this publication will make an essential contribution towards achieving the mandatory competency of sustainability. Please note that all the mentioned publications can be downloaded free of charge from the RICS website. They can also be found on iServe. Now it's probably easier to find them on iServe than it is on the RICS website. Now this concludes this presentation on how to achieve the valuation competency.